Test, test, test. This is going to be live attempt number two. I am seeing audio bars. That is a good sign. I started this live at 6 o'clock. However, I don't think I had audio for whatever reason. But yeah,
One of
trading
those
gold,
days that I'll
oops,
forever remember.
trading gold futures today. Man, let's get right into it. We're gonna work through the flow. I've already kind of worked through my first initial steps as far as just preparing myself to execute the market. Again, we're gonna trade gold futures today. Gold has been kind of fluttering in this range. If you can see the contents within this orange box here. So yeah, we'll see if we can kind of break out of that range. And then we have some news at 6:30 Mountain Standard Time. What am I looking for? Just so I can show us this. Have news at 6:30. Red folder. And on Forex Factory, we're going to pay attention by and large to these red and orange folders on an intraday basis, just to keep us fresh, keep us understanding of what's to come in the trading session, just so nothing surprises us. I feel like every beginner trader has been there at some point, and that point is being in a trade or executing a trade with impending news. And um, sure, maybe it goes your way once or twice, but more often than not, it burns you. I mean, you end up having to take a lesson on your account. So we're just going to remain keen of what's to come. Again, nothing crazy today. Just the one orange felder unemployment claims, which drops weekly. So its impact on a week in, week out basis. It's never super drastic. But again, this folder is the number of the number of individuals who filed for unemployment insurance for the first time during the past week. Actual less than forecast is good for currency. That's our indicator on how to kind of read and interpret these numbers over here. The colors definitely help. And this is the nation's earliest economic data. The market impact fluctuates from week to week, kind of as I just said. There tends to be more focus on the release when traders need to diagnose recent developments or when the reading is at extremes. So how I'm interpreting that is if there are extreme numbers, so the actual is extremely lower or extremely higher than the forecast, something to pay attention to. Or, when there's stuff out there related to the labor market, related to the job market, and you just want to get a better idea of what's going on, this will be your earliest look at kind of what that data looks like. There'll be more important folders, you could say, um, with respect to the labor market. But again, this is a recurring one we see every week, when we're used to seeing. And so, ergo, certainly something one we can and should understand. Next, and again, we're just going through our flow as far as how are we going to prepare ourselves to take high probability trades in the market. We have to do our work early. All right, that'll kind of be a common narrative of how at least I approach Marcus, although he might iterate this a little bit different. I know he feels the same way. But doing your work early, having just an understanding of the macro climate, have an understanding, building awareness of the news that's coming, the risk sentiment, and doing that work before we just jump on the charts and start executing trades. We're going to do our work early. I know everybody's eager to just jump on the charts, start making trades, um, and just playing the odds game and the probabilities game. But this early work allows us to really mitigate our risk early on, and again, just put us in better positions to take higher probability trades. So looking at risk sentiment, gold's sitting pretty neutral, right? And so that kind of makes sense. If you look at what gold has been doing, that's correct. Not much, not much. So risk, and there's confounding factors with respect to gold that we'll get into over the course of the next 45 minutes to hour. But what we're looking at here Again, I'm not going to go through this. We talk about all the time. We're easily, because the meter's right there, it's telling us if we're risk on, risk off. But we're checking to see if we're in a risk on or a risk off climate. And we're gold traders. We've made that determination. Gold kind of being that kind of being our baby, just a market that we want to master before we move on to other markets. So as I continue to talk and articulate upon the markets that I'm trading, I'm going to particularly be referencing gold. So how does this risk sentiment come into play with gold? You can see where we're sitting pretty neutral on gold specifically. Just moved to the risk on side slightly. So broadly speaking, without bringing in every other factor, which would be impossible with gold. But with gold, when we're risk on, gold's going to be going down. When we're risk off, gold's going to be going up. And that's just something for you to jot down and track for yourself. But yeah, so when we're in a risk off climate, money's poured into risk off assets like gold. When we're in risk on climate, money is poured into, and I'm talking about just the market money, right? Money is being poured into risk on assets. And gold is not a risk on asset. So hence you can kind of see the flow there. Gold looking like it's wanting to make a drop here again, just with respect to what has been happening. I'm not going to take any, and I'm sorry, I'm kind of zoomed out. I promise I'll zoom in. I just want to kind of give us the bigger picture here. And I'm just sitting on the 5 minute here. But I'd like to see us kind of move out of this range. I'm sure there's decision making levels all up in here. And again, you can just visually understand that that's where decision making levels are. Not super hard, pretty intuitive. All right, so let's talk about these levels. I am just gonna zoom us in here slightly. Yeah, you can see it. Just look at this mess. Not much going on. Gold market is trying to figure out what the heck it wants to do. And so earlier I brought up kind of some conflicting factors when it comes to the directionality of gold. All right, so you have, and we'll get to rooters probably closer to news, just so we can kind of let the market chill out, if you will, when that news hits. Um, but yeah, if you haven't heard, there is a conflict in the Middle East. In war, I don't want to just categorize everything into one box, right? I have so much more to learn, but to my knowledge, my understanding, war is very destabilizing. Creates a destabilized, political environment. Ergo, we it would put us into a risk off climate. And as I said, what does that mean with respect to gold? We'll see gold just continue to shoot up. Right. So there's large factor number one, large factor number two that conflicts that fact is the fact that there is a lot of money being poured into U.S. soil, U.S. assets from foreign countries. So you have that factor kind of putting us into more of a risk on state with respect to the United States. So hence, you can make sense to why we're not seeing a true directional change or continuation to the upside because of those factors there. And let's see here. I honestly like the way this is setting up. I'm going to take this. Let's see where we go from here. See if we can push out of this area, have good volume. Two really strong candles there. Yeah, let's walk through this. So what's my target? What is the target on this trade? And to determine that, I'm gonna look backwards. I'm not necessarily seeing areas of inefficiency. Again, this orange box is representing liquidity. So right now, I'd like to see liquidity sweep to the downside. A liquidity sweep to the downside. Kind of get into this range here. And pretty preemptive here. News coming in 30 minutes. Again, just unemployment claims. I don't want to say just unemployment claims because I have been surprised once or twice with respect to um, the impact of a folder that I feel like might not have much impact. Let's see where we go from here. Good solid push here. I see a little area of inefficiency there. But I'm not going to cut it short. Sitting in pretty good profit here. What I'm going to do is adjust the stop loss to break even. This trade is now a zero risk trade. And just one contract. And you'll hear us say all the time, we don't want to over leverage early, right? So the trade is zero risk right now. My stop loss is at break even. And that's just a mechanism we use to profit preserve, yes. Um, but yeah, just put us in a really great position to, when we're in a winning trade, make sure it's a winner or make sure it's not a loser to say that much. Again, just managing this trade here. Again, and these are moments right here, and it could go and hit my stop loss here, but I've established the parameters of the trade. Again, we're looking for liquidity sweep down to this downside here. It'd be super easy to close this trade and secure my what 140 bucks, 130 bucks. Cool, yeah. But if it's gonna continue down that way, I'll have another opportunity. If it in the event it hits my stop loss, I'll have another opportunity to enter if it wants to continue down that way, right? This trade is zero risk, but I'm not gonna just close this trade early for fear of missing out on this 150 bucks, right? We're gonna play to the areas, play the range, and go from there. Getting close to break even. Could hit stop loss here. Not gonna change anything. We'll just see how it plays out. Order filled. Or it could continue dumping and be the biggest trade of my life. Who knows? But this is good to see. Just with respect to, okay, again, news is coming here in a sec. So could see some sort of quick spike in volatility one way. Hence, again, being able to, anytime I can make my trade zero risk, um, is a win. Is a beautiful place to be in. This will likely close before news. We'll see. We shall see. Because, right, in so much of trading, right? People ask me all the time, is trading just gambling? And when I'd initially be asked that question, I'm like, what the heck? No, of course it's not gambling. But, in a way, it is. I think I've gotten comfortable making that reference, making that comparison, right? But what is different? What's different is our ability to control the variables in trading and have an understanding of what's going on the back end and building an awareness for certain factors move in the market and forces move in the market, controlling the market. All that stuff is publicly available. Or with betting, not a lot of that stuff is publicly available. You've seen Chauncey Billups was just in court again. Terry Rozier was just in court again for doing shady stuff in the back end. Right. So that's just something I pay attention to when I make that comparison. But I bring that up, because we're playing a probabilities game. Like the market could 100% from here not go any lower. If there's a probability that could happen, right? You say, Q, why didn't you just, like, it's barely moving? Why didn't you just move your stop loss up a little bit? Because who knows? Maybe right here the market just shoots up out of nowhere. There's nowhere we can account for any unforeseen future events that haven't happened yet, right? We could continue going up from here. And I'm just tell myself, damn, Q, I'm so happy that you decided to go about your system the correct way, right? If it continues to go down, let's take the trade, right? I'm just trying to put you guys in my head as far as my thought process when it comes to these executions. Yeah, sure. I got into what, 290 dollars in profit. Um, but yeah, that wasn't the target I set out for myself. Um, that would be the reflection, right? Because yeah, that would be the reflection moving forward. So we'll go from here. Reset news in 10 seconds. Yeah, guys, and especially with news coming, I'd much rather err on the side of, okay, let's be careful here. Let's be careful here. Set the trade as a risk, and effectively go from there. So news just hit. Again, unemployment claims. You won't like see anything super pinball-y, if you will. I don't even know if that's a freaking word. With unemployment claims, but it is news nonetheless. Pretty neutral at that. So, yeah, glad to get that out of the way. All right, so let's reset here. I just really like this volume here. Is on the 1 hour. I clocked that. I really like this volume in relativity. Volume's kind of shaking there. Yeah, let's see what we do from here. kind of left a little inefficiency to the upside. Excuse me. Excuse me. So yeah, I had some these two candles particularly here, and again here I'm sitting on a 5 minute. Good strong bearish candles. Excuse me. News came in. Let's see. Let's zoom out for a sec and just kind of get an understanding of where we're at in this market, right? So you have all time highs sitting up here, all time highs. Since then, this was what end of January. We got that big old drop off, and we kind of crept back up. And since that creep back up, March 2nd, so yeah, Monday, we have since seen a little bit of drop off, and since kind of just hanging out in this range here. Right. So I'm certainly not going to be, um, that guy that's going to predict the market and say, "Hey, we're going down from here," or "We're going to continue to go from here." You just don't know. We just don't know. We can take in all the information. We have LLMs available to us. We can do all the research in the world, but at the end of the day, we can't account for unforeseen events, events that haven't happened yet. It's physically impossible, right? So having that understanding, we just have to prepare ourselves, and design our system, design our protocols to be as objective as possible. Right. Of course, when we get on an intraday level, we formulate a bias and and have a lean, if you will, on an intraday level with respect to the macro, with respect to the sentiment, all the other factors that we pay attention to. But to effectively say that, if I were to effectively say that gold is going up from here generally, or in next week, gold's going to fly out of the roof, or the opposite, it's going to shoot. We're bears. No, we're going to be objective traders. We're going to stick to the system. We're going to mark out our levels, understand where liquidity lies, and this is kind of something that new that I've done. I've marked my areas of liquidity in orange and areas of inefficiency in these gray boxes. And then decision making levels. I don't. That's something I'll kind of play around with here and there. If I feel like my eyes aren't as sharp as they should be, I'll lay down um, my decision making levels, um, you know, for a day, a couple days, just to kind of get my eyes locked in on that. But we've been doing this long enough to where you just know where they are, right? You can have an understanding that, okay, along this area, there's going to be a decision making level somewhere along along the time frames. Again, time is fractal. So no matter what time frame we're looking at the same market. Right. So decision making level is a decision making level. Um, Ergo, we can use our eyes, train our eyes to the point to where we can understand where those levels are. But that's all in the name of, and Marcus will attest to this, just stuff being as clean and crispy as possible, on our charts, not having too much distractions. And you'll see people not use indicators. You'll see people use a million indicators. We use two, um, and we use those two for very particular reasons. They're a big part of just us again doing our preparation work early, putting ourselves in high probability environments to execute trades. And yeah, it's part of our system. Um, there's no hate, no shame to people who use different indicators, who don't use indicators. There's a million and one, and probably more than that, different ways to, what I would say, interpret the market, interpret the candlesticks, interpret um, interpret the candlesticks and understand what's going on. So many different resources that we can use. Indicators are just part of it. Just added information we can use. Um, what I appreciate about the indicators that we use, especially the cloud, is just how mathematically integrated it is. Just the different components. I mean, I'm a little rusty on the various components of the cloud. At this point, I would say, yeah, we freaking use it as part of our system. It's awesome. But the math behind the lagging line, excuse me, the math behind the lagging line, the math. Whew, excuse me, I gotta get it all out early. The math behind span A, span B, the math behind the conversion line is all very intricate. I mean, and tied particularly into price movement. The MACD down here, there's just a really good um, gaze into volatility, general momentum, and when an impending turnaround could happen. Right? What indicators aren't what indicators aren't are definitive tools that tell us when we're going to win a trade and when we're not going to win a trade. Right? We could execute our system perfectly. If we're taking a buy, we could have upward angle of our span B. We could have lagging line above the cloud, um, price above the curve, all the little things that we look for and we could possibly look for within our indicators, and we can still lose a trade. Happens. Any in any trading system that would happen. Why? Because even the market can't account for unforeseen events that haven't happened yet. Um, so we use it as information. We use it as something in our toolbox to again just put us in high probability environments. Do a quick Reuters check. See what's been going on overnight. When I'm looking at Reuters, I'm primarily looking at just stuff generally that is big news, destabilizing news, war, tension. Azerbaijan. Yeah, that Middle East conflict is heavy, boy. Heavy. We'll see where we go. Let's see where we go from there. The comment that I'll make on this conflict is just politics in the United States are just so strange. But I have a couple classmates that are either from Iran. I interviewed with a kid from Iran when I was in Illinois, actually. But here I have a classmate from Iran. I have a classmate from Qatar. Um, oh man, where are those kids from? Where's Justin from? But I have a handful of classmates that are from that area, and to kind of hear them talk about, I don't want to be too dramatic, but it's a serious issue, right? To talk about Iran's impact in that area, it's overwhelming. It's overwhelming, what they do to what they have done, what they are doing to their people, to their citizens, the Iranian regime, they're calling it. And it's just interesting to learn about that conflict. Very, very tough conflict. It's a conflict that's gone on for thousands of years. Just the Jewish and the Muslim, um, kind of interactions in that part of the world. Um, so when you have a regime get into power in that area, bad things happen. They shut off the internet, shut off electrical, and just kill people in the middle of the roads who are protesting and stuff like that. It's crazy. It's crazy. But what's crazier, right? And dare I get just the slightest bit into politics? We're traders, right? So we with so many things. Of course, we have our own personal opinions on certain things. But at the end of the day, like we trade the market. We trade the market, and we have to be objective. Um, but it's interesting. The loudest people with the intercountry, the immigration stuff, the people. I just want to say the people, but it just keeps it broad. But there's people that were very loud with respect to the treat of foreign individuals, with the care of human lives, and which is all good, which is all good, it's all good. But those people are the same ones who are now upset that we are going to the aid of people, civilians in that area. You see people from that area, people from that area living here in the United States, literally rejoicing and moved to tears over somebody finally going there and helping those people out. I think it's just interesting how in politics here, it's not the human element's almost completely removed, right? You don't necessarily care about the well being of civilians, of kids, of women. You just care about a political agenda. You care about sticking your finger at Trump. You care about, um, yeah. Now you say you want to be on the right side of history, but like it just it doesn't clock. It doesn't make sense. That's my little spiel. I'm not going to get too deep into it, but I always encourage myself first and foremost, um, to boil down and understand what matters to me, what cares about me. Fuck the politics. What are the causes and the movements that impact me? I don't like the president. I don't like the president. Cool. But I'm not going to make that the determining factor of my moral compass. I think that's what frustrates me the most, particularly in the climate we live in. A lot of people hate Trump. A lot of people do. A lot of people like him. A lot of people are so. A lot of people are stay objective, like us. Um, but Yeah, I'll kind of I'll leave it at that. I'll leave it at that. I can get down that rabbit hole, about just people being so willing to just forego their beliefs, their moral compass, to stick a finger at somebody because you hate them. It's just such an emotionally different driven thing, especially as traders. The emotion, yeah, we feel it, but are we going to let that determine our decision making? No, no shot. No shot. No shot. So going back to the trade that I executed earlier, and I said I was able to make it zero risk, was okay doing that. Got into decent profit. Price ended up going back and hitting my stop loss. Here again, you just don't know what happens. So anytime you can make your trade zero risk is a very good position. Is the best position to be in. The best position to be in. What I need to work on for myself is maybe sometimes I'll do it a little too early. Those are reflections I have to make, right? And over time, I know I will continue to get better and more refined at the timing of that. Um, but in the example today, we was happy how I executed that. We can't account for unforeseen events that haven't happened yet. We can't connect the dots moving forward. So there's plenty of areas of inefficiency to the upside here. Who knows? Maybe over the next 15 minutes, we just blast through that, right? And then, we can go back and back test and look at the historical context, the really brief historical context, yes, but as to why that happened, right? But we can't connect the dots going forward. We can't. It doesn't work like that. Time doesn't work like that. So, in the moment, in real time, and this is actually something that is something especially beginners. Um, I shouldn't say that because it's I want to find a good word, but I'm not finding it. It transgresses through the skill level of trading, right? We trade as skill level of traders. Um, and I lost it, but I'll find it. Um, but it's building a connection between back testing and forward testing. And you using your back testing in a way, and conducting your backtesting in a way that actually transfers to your forward testing, actually transfers to trading, right? Because anybody can look back. I could look back right here, replay that, and say, "Yep, I'm gonna enter there and sell there." Of course, I'm not gonna get out of it because why would I do that? Price is gonna go down all the way here. Um, it's easy to build disconnect with our back testing and our forward testing. Right? When we're back testing, we have to take into account that in the moment, you have absolutely no idea what's going on ahead of there, right? You have no idea. You can't back test on Top Step, but I'm sure most traders have TradingView. That's pretty much all I use TradingView now for when I'm trading these funded accounts. But you can back test, but it's just so crucially important to not back test in a way that could that doesn't support our real time forward testing. I hope that makes sense. It's so important. I need to get better at articulating the importance of that. Again, it's just so easy to look back, find a time where the market moves, and say, okay, yeah, I would have entered there. Blah blah blah. Yep, strategies all in place. My ding 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 ding. Yes, that's good. Yeah, that's good. Yes, but when we're practicing back testing, practicing executing trades in the past, we have to account for what that looks like in real time. It took me a while to figure out, but again, I'll get better at articulating and explaining that. So what I'm looking to see here now is, okay, is gold just going to kind of stay hanging around, stay being cute in this zone, if you will. Try to get a little breakout there. Didn't want it. Didn't go. Let's see where we go from here. All right. Check risk sentiment. Should be reading risk on. Yes, risk on. With respect to risk on, by and large, we'll see it gold go down. Money's pouring into risk on assets. Gold is not a risk on asset. Ergo, gold money is not being poured into gold. Again, I'm using very vague language here because obviously there's trillions of dollars, billions of dollars, trillion, billion. There's a very big difference between those two. But there's a lot of money going through these markets. Again, it's just how the market's skewing. This is so good to read by this little risk on risk off meter. Okay. So let's zoom out. Let's take a look at some of these areas that I have marked up. I'm still trying to get a feel if I like this orange or not. Because again, the areas of liquidity are super easy to see. Liquidity is found where, guys? Little quiz question for you. Where is liquidity found in the markets? Two places liquidity is found. And so as you're mulling that over, again, I'm going to give you the answer here in about 10 to 15 seconds. But there's two areas that liquidity is found. There's one area and there's two areas representing the two areas where liquidity is found. Yes. Yes. Perfect. Check the chat. Answers in the chat. Liquidity is found at the highs and the lows, right? That's where liquidity is. Yeah, that's where liquidity is. Okay. So that's important for us to understand. What else have I talked about? Areas of inefficiency marked by my gray boxes here. I'm pretty sure it is this one. These are actually two different boxes found on two different time frames. So this first box here, area of inefficiency. This is a discounted area in price, hence area of inefficiency, hence fair value gap, right? We know these areas are going to be filled up at some point, right? We know that almost an empirical fact that this area, this gap in price, again, in this setting, not going to go into really what that is. It's just a gap between candle one and candle three in a three candle series. And we know, back test it, watch some of our videos on it if you don't understand what they are. We know those areas will be filled up. Hence, it's important for us to lay out on our chart. There discounted areas in price. So discounted areas for us traders, right? Something we can kind of bank on. And then this upper one here, found on the 4-hour. Again, gap in price, gap in between candle one, candle three, and a three candlestick structure. And so I'm going over this because before I get off here at 7 a.m. Mountain Standard Time, so in 8 minutes here, I kind of want to, just let you know what I'm looking for. But again, going back to our conversation about, 15, 20, 25 minutes ago, I will not sit here and tell you that gold is going to go up from here. I won't sit here and tell you that gold is going to go down from here. All right. What we can do, control we can control. Yes, as cliche as it sounds. But we're just going to put position ourselves in the best possible position to execute a high probability trade when the move does happen. One thing we do know, while we don't know the direction of the market, we know the freaking market is going to move. We know it has. Look back to eternity. The market freaking moves down or up. We can't predict which way. We can formulate a bias on an intraday level. Yes, awesome. We utilize our macro to have an understanding of what's going on. But again, we're going to just go ahead and put ourselves in the best possible position, have our levels marked out, have target areas marked out. Okay, price starts to move down here. Potential entry could come here, should come here. Okay, we're going to take it down to this area. Or prices, once price moves up to this area, okay, we're going to take it through this area of inefficiency. Bam, done. Awesome. Cool. So I just wanted to do that on the higher time frame, just so we can kind of see that. All right. So for the next 5 minutes, last 5 minutes, let's talk about target areas here. And so to the downside, bear side, I'd love to see if we get good push. I'd love to see us sweep through this liquidity area here. And you could call me in there. There's some verbiage, some nomenclature that I have to clear up within myself, because I would also call this a no trade execute zone. So like if we moved inside this zone here, I'm gonna be careful about my entries when we're in here. If I'm in a trade and I'm taking it through here, heck yeah, I'll already be at zero risk. I'll probably have slid my stop loss, and things would be great and beautiful in the life of Quentin. But who knows? Maybe we'll see that today. But yeah, so to the downside, we have a lot of our structure here for in place for a sell. Starting to lose that volume on our MACD though. But again, of course, could get that back. Lagging lines below price. Love to just see change in angle here. And again, volume. So we get that. Setup shapes up. I want to take this into and through potentially this area here. And real quick, actually, I just want to see what things look like to the downside as far as areas of inefficiency there is there. Oh, Nelly. Let's see. Let's just mark this up just in case. That's area of inefficiency. So I'm going to turn that white gray. Cool. Just so I have that additional target as well. Pop. Beautiful. All right, to the upside. To the upside end. So okay, let me be specific here. This liquidity zone, if you will, no trade zone, if you will. Guys, I just want to be sharper with the nomenclature there. Okay, I can be better there. So bear with me. But we're looking at 5046, and again, this is MCG Gold Futures. Just to be clear, price will be a little bit different if you're looking at XA USD. So about 5048 down to 5005 ish, and then this area of inefficiency 4969 to 4961, 4960. To the upside, if we move in here, as simple, I want to see these areas of inefficiencies knocked out. All right. So if lagging line moves above price, we have buyer's volume on our MACD, cloud span B's angled upwards. We'll hammer the buy. I'd like to take this through these areas of inefficiencies, essentially ranging from 52.15 to 52.91. Okay. Hopefully you guys got me there. But again, just target areas that I'm looking for. Areas of inefficiencies will always be there in the sense of they'll always be there with respect to the market, right? Maybe not within range of say the trading range for the day, but there will always be areas, target areas, innate target areas within the market that we can use just to put ourselves in high probability environments. Price starting to move down, man. I like this. I like this sell here. I like this sell here, but I'm gonna be patient. We've seen price struggle here. I could enter a sell here, and it could work out wonderful for me. But again, I'm gonna stick to the system, stick to our volume, stick to our angle, and yeah, man, just continue to do the right things. For any new trader, I know I struggled with just determining what the right things are. Nobody's really teaching you this stuff and teaching you in a way to where it scales with time. And the advice that we give, the advice that our platform gives is, you have to put in the work and understand some things that are effectively innate to you, unique to you. Everybody approaches this game a little bit different. Everybody's emotional dispositions a little bit different, right? But as you grow, as you get better as a trader, you start to figure out what those right things are, what the things are within your life, your trading system. It just puts you in a high probability context more often than not. We're always going to lose trades. We will never get to a point to where we won't lose trades. AI will not get to a point where it won't lose trades. Why? We can't take into account unforeseen events that haven't happened yet, right? No system's perfect. No person is perfect, but we can continue to just do the right things, stick to our system, stay disciplined to the system, manage our risk, don't over leverage early. And again, finding a difference between, okay, is trading betting? Sure. We could also call any probability game betting, if you will. What makes it different from, say, sports betting? is what I just talked about, being able to control these variables, right? Uh, um, Control or leverage, and it's very, excuse me, and just very various different things. I can just continue to spit off and babble, but not a lot of it is super important. I feel like I got my point across. So yeah, hit 701. Would have been awesome for this to completely dump on my first execution this morning. Didn't happen. Happy with how I played it. The morning moves on. Get on with my morning. I'll have the charts open probably for the next 2 hours or so as I, eat my breakfast, have my coffee, and do all those things that us humans do to stay alive. Important things. So hopefully, I was able to spit a little bit of game for you guys. Um, yeah, we were just uber passionate about sharing our process, sharing our journey. And, not every day is beautiful, not every day is glamorous, not every day where we're gonna hit big. If there's any trader out there that you feel like that's so, or they're making you feel like that's so, they're lying to you, or you're just a damn fool, because that is just not the way the cookie crumbles. This is a long game, right? Something we have to be committed to, and we certainly are, and we are furthermore just super passionate about sharing our knowledge, and giving the world, giving YouTube, all you guys, the information that we've learned over the years to hopefully speed up your process, and help you out a little bit. So, if you've enjoyed this live, if you made it to this far in the live, I appreciate you tapping in. Marcus will be live next Tuesday. I will be live in a week from now, next Thursday. Watch out for some YouTube videos coming this end of this week, through the weekend. We'll continue to work on that for you guys. So appreciate you guys. Give us a follow on Instagram, Bloom Entities. And yeah, appreciate you guys. I'll see you guys in the next one.